Welcome back to another update of Smart Stocks Sam. If you are really interested to make money out of US stocks, do not forget to subscribe and tap bell icon. Because on this channel I deliver timely updates before crowd arrives. Alright, here we go.
There is a $13.5 billion disconnect hiding in plain sight. Right now, the average retail investor is throwing money at fleeting meme coins, completely oblivious to the massive, structural tectonic shift happening at Bitmine Immersion Technologies, better known as BMNR. Today, we are answering the billion-dollar question, is BMNR about to explode? In this Analyst Price Target Analysis, we are peeling back the curtain on the most aggressive corporate pivot in the history of digital assets. You aren't just looking at a mining company anymore. You are witnessing the birth of the MicroStrategy of Ethereum. To capitalize on market confusion, you have to ignore the panicked headlines and follow the balance sheet. Right now, the mainstream news points to a $4.85 billion loss as a death knell. Retail investors and bots see that red ink and run. That is their first mistake. The data reveals an accounting mirage. This isn't a failing business or a cash crisis. It's non-cash adjustments and selling pressure hiding a gold mine. The smart money isn't looking at the loss. They're looking at BMNR's pivot into a capital-light treasury engine. They've evolved beyond mining to stack unencumbered, yield-bearing assets that are attracting massive institutional flows. At $28.80, the market is pricing a paper loss, completely ignoring the incredible velocity of the actual assets. While the crowd flees, the experts are modeling a price target that the current ticker isn't even close to reflecting. When we look at the analyst consensus for BMNR, we see a fundamental mispricing that is almost unprecedented in the mid-cap space. Even the conservative low target from analysts sits at $39. That is 35% above where the stock is trading right now. The situation becomes even more explosive as we move up the curve. The mean target is north of $48, and the high-end estimates, from the analysts who truly understand the Ethereum staking model, are calling for a 108% upside to $60. That represents a massive margin of safety. The market is treating BMNR like a distressed, dying asset, while the analysts are looking at it like a coiled spring. But none of these targets actually matter if we don't look at the raw value of the digital gold sitting inside their vault. Think of BMNR like an iceberg. The visible valuation you see on your trading app is just the tip. Below the surface, the company is currently trading at approximately 0.93 times its net asset value. This means you are essentially getting direct Ethereum exposure at a 7% discount to the spot price. At this valuation, you are getting their entire operating business, their high-tech staking infrastructure, and their massive venture upside completely for free. In a market that usually charges a huge premium for wrapped crypto equities, BMNR is a pure arbitrage opportunity. This rapid scaling is the result of a masterclass in corporate strategy. In a lightning-fast 8-week window, BMNR executed a remarkable feat of capital allocation. They recognized the old mining model was too capital-intensive and transitioned to capital-light accumulation. The result? A 10 times increase in asset backing. They moved from $4 per share to a staggering $39 per share in Ethereum exposure. This move didn't just change their balance sheet, it changed their status on Wall Street. BMNR recently became the 28th most traded stock in America, capturing nearly 30% of the entire global crypto treasury trading volume. They aren't just sitting on these coins like a passive exchange-traded fund. They've turned their treasury into a high-performance engine that functions like a modern-day bank. BMNR is essentially acting as a crypto-native bank. They have 1.83 million Ethereum staked, representing over $5.4 billion in total value. This generates roughly $180 million in annual recurring income. They have created a compounding machine where the yield is reinvested to buy more assets, which then generate more yield. Their ultimate target? 4.2 million Ethereum. That would skyrocket their annual income to $500 million. While these growth numbers look like something out of a sci-fi novel, there is a hidden metric we have to discuss that changes the risk profile entirely. We have to address that $5 billion elephant in the room. We have to be objective. Growth this fast isn't free. To build this treasury at breakneck speed, management has leaned heavily on share issuance. We are looking at a 1,046% increase in share count over the last year. This is the strategic constraint that every investor must understand. For this MicroStrategy playbook to work, management must remain disciplined. They must only issue shares when the stock is trading above its net asset value. Abandoning that discipline and diluting when the stock is cheap would destroy shareholder value. However, BMNR is currently sitting at the center of a perfect macro storm. While traditional markets are worried about bond yields and tariff threats, BMNR is acting as the institutional bridge. They are the only mandate-friendly equity proxy for Ethereum. Firms like Fidelity are watching this ticker like a hawk for this exact reason. When you add in the upcoming network upgrades, you have a structural tailwind that could easily override the dilution concerns. Weighing the supply squeeze against the valuation concerns, the bull case is simple. Think Standard Chartered, think Tom Lee. BMNR is locking up 5% of the total Ethereum supply, essentially creating a massive yield floor. This is where the institutional gateway comes into play, as it is an essential vehicle for corporate mandates. This also creates a yield floor where the recurring income supports the valuation. But the bear case? Let's be blunt, simply Wall Street and the macro crowd are missing the point. Traditional cash flow models just can't handle this. They suggest a ludicrous 18-cent fair value because they completely miss the asset's velocity. They are also concerned about the dilution drag, with a 1,046% share increase hurting earnings per share. Finally, the bear case is extremely macro-sensitive, with a high beta to global liquidity shocks. If we dig deeper into the actual numbers on the chart, the entry point becomes clear. We have to look at the technical setup and critical support. Technically, the short-term chart looks, well, it looks nasty. We are trading below both the 20 and 50-day moving averages. But there is a line in the sand, a single critical level, $2,750 per Ethereum. The catalyst here is a supply-side squeeze that could become explosive. BMNR is locking in nearly 50% of the supply, and if support holds, this illiquidity drives upside volatility. So, what is all this actually worth? What is the final verdict? The bottom line is that buying BMNR at $28.80 is a high-conviction bet that they are the MicroStrategy of Ethereum, trading at a massive discount to their own assets. This is a speculative buy, but it comes with conditions. Condition A: Ethereum must hold $2,750 support. Condition B: management uses the at-the-market offering only when trading above 1.0 times the net asset value. If you believe in the yield-bearing future of Ethereum, BMNR is the most aggressive vehicle to play it. This is a speculative buy with the caveat that management must stop diluting if the price drops below the net asset value. Is BMNR a portfolio maker or a dilution trap? Drop your price target in the comments below, and don't forget to like the video if this analysis gave you a valuable takeaway.
Alright, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.